what does the investment universe offer for me once I have my goals planned? So, Vishal, I'll start with you on that point on with the current economic landscape and changing market trends. According to you, what are some of the emerging investment opportunities or asset classes that investors should consider exploring, and how can they leverage these opportunities to enhance their financial well-being?
So I think that's a great sort of start to this important conversation around financial well-being. So assuming that goals have got set up, trade-offs have been made, and I think one of the biggest challenges that all investors face is the trade-off between the here and now versus the longer term, because the here and now gives us immediate gratification. The later on may or may not happen, and I think COVID sort of accentuated that a little bit by saying, why save for the future, because you don't even know whether you'll be there in the future yourself or not. So I think it's important to look at a little bit of history on asset classes in India. Traditionally, most people have used fixed deposits, gold, and real estate as their preferred asset classes. And it's only been in the more recent past that equities as an asset class, especially listed equities, has once again come back in focus. And I think that's great news, because what does tend to happen is, very clearly, for a lot of people who are starting off on their journey, they do have a very, very long runway available to take advantage. And equities as an asset class has been well proven to actually deliver great outcomes over long periods of time, even though there is significant intermittent volatility at some points. And I think the need to be able to deal with that will typically only happen if you're very, very clear that the reason why I'm saving is longer term, and not something which I need the money tomorrow or next year. So I think it's important, once you get to listed equity as an asset class, to now start to think, where are the innovations happening, and does all innovation have to be complex, or can simple innovation actually be a great tool for you to start off with? Uh, I think over the last few decades, one of the best innovations that have happened, which are very, very simple actually and very effective, has been the use of index products. And it takes out some of the excitement from investing, which is its negative. But really, I don't think investors need to get into investments for excitement. There are much better avenues to get excited about. uh, the index investments, both in terms of equity as well as debt, have proven to be very, very efficient instruments to be able to get access to an underlying asset class at a low cost, removing the risk of you picking the wrong um, asset manager. And of course, if you're able to combine this with another simple set of innovations which are more process oriented, which is SIPs, that I think have become very popular, but also the use of SWPs to withdraw money out. I think those combined together are very, very effective, simple innovations that can add a lot of value to investors. And of course, the SIP doesn't have to be necessarily only in equities. You could run it in debt, you could run it in gold, you could run it in international investments. So you have lots of alternatives in terms of how to use it. I just want to add one more innovation in, which is the use of dynamic hybrid instruments, which is essentially a category called balanced advantage funds. I think for a lot of investors who are starting off, who are confused, they don't know how much to put in equity, how much to put in debt, how much to put in gold. They're all confused. So they look at either balanced advantage funds, which can have just equity and debt dynamically managed, or they look at multi-asset allocation funds, where again you could have multiple asset classes coming together and giving simple solutions to investors to be able to solve for what they're trying to solve for, which is ultimately get to their financial goals and get to it at the time that they want to get to it. You don't want to tell your child, when you've committed to an education, that stock markets are not doing well right now. So therefore, why don't you go to college 2 years later? Hopefully, stock markets will recover by then. So you need to be able to combine this well to make it happen.
Of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.